Hey there, good morning, everybody. Christopher Inkswood, Texas West Capitol, running just a bit behind this morning. It's a few minutes after 11 a.m. Central Standard Time here on, what is this, Wednesday, the 23rd of September, 2020, San Antonio, Texas. Good to have you all checking in. Of course, mentioned prior, coming up last week and this week, from now on, we're just doing the public live streams on Mondays, Wednesdays, and Fridays. So make sure you've updated your schedules for that. By the way, you can join us at howtotradetowin.com, guys. We'd absolutely love to have you there. Man, of all the days yesterday to have an issue, we had an automatic update for one of the bits of software that we use, and it totally took down the site. So I spent all day restoring a previous version of the site. And so as you can see, the what we have on our page here is not exactly what it was. I'm still working on it. I just wanted to get most of the stuff up here. But one of the things you're going to notice is if you zoom on down here, you don't have that comparison yet. What we're showing you, what you get for Tier 3. And so Tier 3, again, and if you want to join us, you can just go right up here to join us and click on that. And it'll take you right to where you need to get to. But right now, we're only open for Tier 3 members right now. And so that includes 19... assets that are updated daily and intraday. These include cryptos, these include forex pairs, these include stock indexes, it includes gold and silver and oil and natural gas, and the DXY. So all the important things to help you get a better feel for what's going on in the overall in the economy, as well as some specifics. I can't even say it, specifics in there. You get weekly training every Wednesday, so that's today at 4 p.m. Central Standard Time. If you're in some part of the world where you can't make it to that time, it's always recorded. We've got a specific channel in Discord for you guys to discuss things and ask questions and whatnot, so you're never just left out there on your own. And those weekly trainings, by the way, are absolutely fantastic because that's where we get in there and teach you all these little tips and tricks and techniques that allow you, even if you've never traded before in your life, that allow you to actually start trading immediately, and start making some money while you're taking advantage of the other educational videos we have there. We've got a whole educational series on the markets themselves. Starts with the basics, how and why the markets move like they do, risk management. It goes into the basics of indicators and how to use them properly alone and together, how to properly identify price action and candlestick patterns, all these things. It goes into Wyckoff, it goes into Elliott Wave, and anything else we can add to it. So you get that as well. Plus, you get to request charts on anything that we can chart. Anything basically that's on TradingView, that's chartable on TradingView, we can chart it. We'll do it. If you've got a chart, you want us to take a look at it, we'll critique it. What else do you get as Tier 3? Anybody remember? You get, hot takes. Yeah. Every Sunday, Tuesday, and Thursday, you get stock, crypto, and forex trades setups for you every evening. The Sunday, Tuesday, and Thursday evenings. You'll get that as well. I feel like I'm forgetting something here. Chart request. You can request a chart. Like I said, I think I already said that. I'll just put anything out there anyway. Tons of stuff, guys. We've got a DeFi channel. We've got where Scott Melker talks about all his DeFi trades and what he's doing there. We've got a VIP Alt Opportunities channel that you get as Tier 3, which if you do that, not only does Scott talk about his alt trades that he's doing and he's getting ready into, usually before it even goes in his newsletter. But he also then, not just him, but we've got a few other great members in there who are just consistently in there and finding trades left and right. So, sorry, I'm just trying to remember everything it is, guys. I'm going to tell you where right now. Ask anybody that's joined us, man. We got so much stuff going on in Tier 3. It's usually overwhelming at first for most people. So join in there. Hey, listen, and here's the thing. Yesterday, we put out a discount code there for the people that are subscribed to Scott's newsletter. That went out yesterday. Of course, like I said, yesterday out of all days, the website goes down. So if you got that, make sure you guys just come on over here. All you have to do is come on over here go to click on Join Us. Choose the 1 month because the coupon only works for new members. It only works for 1 month. And you do that, and you type in the coupon code, which was what? Oh, I think it was Wolf's Den 50% off, I think. So I think it's, see if I type it in here, Wolf's Den 50% off. I think it was that. God, let me just check here real quick. Let me make sure, guys, because I don't want you to miss out if you wanted to try and get in there. I know more than a few of you tried, and we're having that trouble getting into it because of what was going on there. So give me just a minute here, and then we'll jump on into what's going on with old Bitcoin over here. And the DXY. By the way, the DXY, guys, I've told you time and time again, I've continued to talk about this. It's all about dollar, and it's all about dollar liquidity. And as long as that's an issue, you know, which it will become. People are going to go to the dollar when the markets start looking bad. Everybody going for the dollar, you know, means less dollars out there. You got more people jumping for it. Dollar liquidity becomes an issue. And so the problem with that is you get caught, guys. You get, you know, everybody's going to continue to say, they're going to give you all these reasons of why the stock market, why gold, why silver, why even Bitcoin needs to go up. But absolutely none of that's guaranteed. And all of that is actually very much at a what's the word here? In danger of actually not happening at all because of what's going on with the dollar. If the dollar's rising in value, it's all but confirmed in just about every way possible that it's bottomed out. And so if it continues to rise and it gets that, I mean, if the value of the dollar is rising, anything that's denominated against it is going to necessarily decline in value. Why? Because if you have a thing and the dollars that you're using to pay for it are worth more than what they were previously, then it takes less of those dollars to buy that thing. So the price of that thing is, you know, has necessarily dropped in relation to the value of what you're trading for it, coming in at a greater value there. So don't forget that, guys. All right. By the way, if you're looking for that Wolf's Den 50% off, yeah, there's the coupon code, guys. If you go on up there, like I said, go in to Join Us, click on 1 month, and then you add that in the coupon box. It says, you know, do you have a coupon code? Click on that, add that coupon in there. It should give you 50% off of the first month of Tier 3 access. By the way, Tier 3, you're going to get also everything that we've done, all these weekly trainings that we've done for Tier 3 over the last 2 months plus now. You're going to get access to all that as well, so you haven't missed out on anything there. So I would say jump into it. The number of available uses of that coupon are limited. So I guess what that means is basically the number of people who can use that coupon is limited. So if it's done, when you try to use it, that's it, guys. I can't do anything about it. But as long as you do it and it's still there, you've got a chance. So jump on it, guys. We'd love to have you with us. I'll tell you what, we're a great group of people. Our members are probably even better than I am. I'll tell you that right now. They're great. They really are. They make it a lot of fun to do what I do here. So come on in, guys. Let me see here. Sean, what's going on, man? Gerben's here. Esteban says, ready to learn. What's going on, Mads? Kyle? Positive Vector. Hank is here. Pixafin checking in from Switzerland. I just love saying that. 2000X, yo, what's up, man? Crypto Mowgli, how you doing, buddy? Satoshi's evil sister. I like that. How are you doing this morning? Spiral Architect, Crypto Girl, great to see y'all. French Bull checking in. Let me see here. Hank says it isn't confirmed at all yet, but actually it is, guys. It is confirmed, depending on how you want to look at it. There are other confirmations you can look for, but, it is confirmed. And it is confirmed if, talking about the DXY, if the Elliott Wave count is correct, it is confirmed. But there are other ways to confirm it, which is those other things we're talking about. And we'll look at that today as well. Hank's looking for what? You're looking for 9466? Well, Hank, you can argue all you want, man, but you're wrong. If the wave count is correct, it's confirmed. It's up past wave 4, man. You can't go up past wave 4 and come back down. That's one big if. Hank doesn't want to believe that the dollar could possibly be strong, guys. Careful, Hank. But seriously, we're almost there. We're almost there. But we'll look. I've got a little bit higher up, as I mentioned to you guys, that I actually want to see it go, to really just kind of pretty much get rid of everybody's, thoughts that, it's not, it's not bottomed out. So that's just a little bit further ahead, but we're almost there. We'll see. We'll see. So, Bitcoin here. So last night for Discord, we were up here, and I mentioned that looks like the top there. That was the 38.2 retracement. It's a good solid wave forward. Gives us an ABC here. Total we're looking for down, and so it came down this morning, bounced up. We've got 5 waves down. I've actually got this on 15 minutes just to show the internal wave count here. You got a 1, 2, and then a 1, 2, 3, 4, 5 gives you a 3 and a 4 and a 5. So there's 1. We've got 1, 2, 3, 4, 5 gives you A. ABC gives you B. And then 1, 2, 3, 4, 5 gives you C. Price getting rejected just around that 78.6 retracement. It's all solid. So we're looking for a decline, a continued decline now. We've declined below the 15-minute pivot, which is bearish. Drop it down through the pivot. So usually it means you should be looking at the S1 pivot at least, potentially the S2. If this count is correct, and this is an ABC, then dropping below B here confirms that this wave 2 top is in. Movement down here below the wave 1 swing low will add a lot more to that confidence. Based on that, the 1618 here for wave 3 is at 10,225, so that's my minimum wave 3 target. That would give us a wave 4 right up here around 10,344, which is right at the bottom of this this swing low right here. And then wave 5 is going to get you down to the top of my yellow box here at about 10,150. And you're pretty close to the EQ down there at 10,120 or so. So definitely wouldn't be surprised to see it continuing on down to that. Again, I've said, the wave 3 and wave 5, these are minimum targets. It could extend further on either one of them there. Or even wave 4, instead of going up to 38.2, can only go up to the 23.6 and turn around and head down, depending on how weak that is. So a lot of things can happen, but minimally, we're looking from where we are heading down here to this 10,225 area. Let me see here. If we're jumping out to the 1 hour here, lots of room on the Stochastic RSI and RSI to fall off. We've got the S1 pivot for the hourly and 4 hour right down here. And so again, you get dropped down there. You get rejected right below that S1 pivot, and then you head on down here lower. Let me see. 4 hour, we're almost overbought with the 4 hour, but again, OBV continues to look weak there as we do this. I'm still kind of right now looking at this as a 1, 2, 3, 4 with a 5 maybe still playing out. There is the possibility, as I've talked about before, we could have a 1, 2, 3, 4, 5 here, and then this ABC up here to this, this real small pullback could just be a real low too. I'm not real keen on that because it doesn't even reach the 38.2 of this whole pull down. So not that it can't be a wave 2, but until it shows me it is, I'm going to lean on this being a 1, 2, 3, 4 right now. Daily, of course, you had this big ugly kind of confirmation candle off this bearish engulfing up here. Pushed up here, really just getting rejected basically right below the S1 on the daily. So we're looking for lower lows, and we should be looking minimally down here to S2. Overall, as it continues going down there. Really potentially looking at getting down here to this HVN down here at around 91.60 or so. So we'll see how this continues to play out here, but shorter term targets are what they are, as mentioned earlier. Again, setting up this move down, you had this negative divergence here on OBV. You had lower highs while price was making higher highs. So again, basically the pros selling into retail here. And then, of course, the sell-off to continue down there. So, nothing's really changed on anything we've looked at. Things continue to be as expected at this time. if you want to look at it another way, your first target should be this swing low right here. If you get through that, should be this swing low. If you get through that, should be this swing low right here. If you get through that, then you could do it down. If you want to use pivots, you should, we pushed up through the pivot, drop back through. As long as this pivot holds as resistance, you should be looking a minimum of the S1 pivot for a target, likely the S2. I don't know how else you want to look at this. Those are probably the best, easiest ways to look at it right now. So, yeah, that's kind of where we're at with that. Let me see here. Let me see here. Let me keep up with you guys. Just catch up to everybody here. Where y'all at? Let's see here. Onyx King, what's going on, buddy? Good to see you checking in, my friend. Let me see here. Hank says euro deflation is a bad thing for us. Yeah, well, we're talking about the eurozone and how it was going in there into the bad territory there. With the numbers. So I don't know. We'll see how it all goes out. But again, the DXY basically, guys, is driving all things. I see everybody still trying to correlate. Oh, look, stocks are, Bitcoin's dropping with stocks, or Bitcoin's rising with gold. Guys, they're all reacting to the DXY. Again, it's this idea that the thing that it's valued in is rising in value. So again, if your dollars are more valuable, it's going to cost less of them to purchase something that's denominated in dollars, right? Because people want the dollars more. So it's worth more. It's more valued. So anything that you're comparing it against, all things held equal, should necessarily decline in value. Now, the only way you combat that a bit is if you can have enough buying coming in to put enough buy pressure on whatever your product is or asset is, so that it pushes up against that drop in value. And that's why I said Bitcoin, out of all of them, I think probably has the best chance of not being as affected. But I don't know, guys. Everything that I've been talking about is basically playing out. It took a little time to get there. It is what it is. But the reality of it is, macro. If we look at the macro picture of the world, basically, and in the individual countries, I mean, there's nothing good going on anywhere, guys. And now they're talking about, I think it's over there in Great Britain, they're talking about what they have to do to combat this second wave of growing COVID infections over there or whatever. And, and of course, the U.S. is going to do whatever it's going to do. And so even temporary or partial shutdowns or whatever, if they're going that nonsense route again, I mean, all that's going to do, guys, is just going to make everything else even worse off. I mean, here in the U.S., everybody got that little, or, everybody under a certain threshold of income got that little $1,200 bonus check, basically, back in April? I ain't seen nothing since then. They had all these great unemployment benefits which ran out. And the closer it gets to the election, guys, the less likely I think they are to approve any kind of monetary transfer to people, another check or something, or really even bailouts of any sort or whatever. So, there's so much going on out there, guys. None of it's really positive. But yet everybody expects that the stock market's going to continue to rise and gold's going to continue to rise. Why do they think gold's going to continue to rise? Because the government's printing so much money. Oh, my gosh. And I'm sorry I say that way, guys, but, man, sometimes it gets so frustrating because people don't know what they're talking about. Again, we've discussed it time and time again. They're always talking about the sound bites. Now you got, oh, my gosh. One of the worst things with social media is these memes. Why? Because everybody gets so into these memes. This is like memes are like the visual soundbite. Everybody gets on, they go, oh yeah, her, that's what it is. But it's exactly what they sound like when they talk to me about it. Because nobody is stopping for once and even reading up what is QE? How does the government go about QE? What kind of effect does it have on what and why? They just say, oh, look, the government's printing money, so it's going up, you know. And then they go and they buy gold and silver. And then it drops. And it's down what? It's down almost, what, $300 or $400 now? And people are buying there. So now their thing is, oh, well, you know, it's a long-term hold. Yeah, that's what everybody thought when they bought the top, you know, when they bought the top in 2011, and it continued to drop down as well. And it took them 10 years just to make a little bit of profit, just to get up like 10%. And now they're back down. If they didn't sell, they're still out of profit right now. You know, at the end of the day, guys, you know, people are like, oh, I buy gold for its protection against inflation. Don't do that. It's nonsense. Or I buy gold and precious metals as a protection against government, a lack of, surety about the government and whatever. You know what, guys? At the end of the day, gold and silver and all these other things are really just investments. You know, give them whatever reason you want, but at the end of the day, they're just investments, and they their price reflects it. People buy and they sell it. So, you know, your goal, if that's your goal, shouldn't be to buy gold at the high and then hold on to it for 10 years before you ever see any kind of return on it. If you're holding gold when the dollar is getting stronger, then you're not doing yourself any favors. You're losing the value of what you bought. Why would you not just, if anything, short it, I guess, and make some money as it dropped, or at least sell it at the top there, you know, toward that top, and then don't take the decline. You lock in that profit, and then you buy it again when it's down near another bottom. I mean, why wouldn't you do that? Why would you rather just buy it and hold on? I don't know. You know, if you've got a very, very, very long time frame, 40 years, some 50 years, maybe you can do it and be fine with it. I don't know. It's never really made a lot of sense to me as far as that goes. So just some things to think about there, guys. Let me see here. What's going on, Zach? Good to see you. Vanta, what's going on? Devin's here. Let's see here. Pedro, what's up, man? Wild idea on the weekly time frame. What do you think of the possibility of Bitcoin doing a massive bull pennant pattern since the all-time high? You know, I've talked about that many times before. I'm not really a big fan on this idea. It's possible, but I'm not a huge fan on it. Why? Because if this is an A, B, C, D, E, well, I mean, first of all, you're going to probably get it down here to around 6,600 anyway. This HVN down here for E. But if it does, that means all you have is one more move up, guys. The triangle comes right before the very final movement. So if this is a triangle here, all you've got is one last move up. And then you'll have a large correction. And if this is, that would make this a wave 4. Which means you have a wave 5. Which means, you know, you're probably looking only at 28,000. Maybe if you're lucky, you can get 36,000 on a real stretch. Maybe. But you're not getting 50, you're not getting 90, you're not getting 100 plus on the move up if this is a wave 4 triangle. So why does everybody want that to be? And they want that to be because people want things to go up the minute they buy it, so they don't have to think about the fact that they don't know what they're doing. You know, in general, I'm not talking about you, obviously. I'm just saying people in general. You know, why do they want this to be a pennant here and go up, or a triangle? Why is everybody so bullish on crypto Twitter? Because most of them, including your big names out there, guys, I'm not going to go here and list them, but let's face it. You guys follow some really big names out there, and they're not traders. They're not economists. They've maybe started a business. And that's good, but that's not the same skill set as being a trader. And so they get in here, and all of y'all are very, you end up being very bullish about things, because the idea is you buy it here and you want it to go up in value so you're profitable. But you bought it there because everybody else was telling you it was profitable. You should buy it. It's going up. New bull market, all this stuff, right? Now, maybe it is. Maybe it'll go up. Okay. But the surety with which people are pushing that is the scary thing out there, guys. People are guaranteeing you this. And that's the problem. That's a big problem. I'm going to tell you guys right now, if you ever have anybody out there guarantee you that price is going to go to, the price that, that Bitcoin is bullish right now for sure. Or, whatever. I mean, just be wary of them. I've got my things that I think are going to happen, which I've discussed. But I'm not like, oh, we're definitely in a bear market. That's all there is to it. No. As I've said, we've got these other things that we have to watch, these other levels we have to watch that could print out other possible bullish patterns or bullish counts, right? But yeah, overall, I do have a bias toward that lower low there because I think that's where it's going because of everything that's going on in the economy. But that doesn't mean I'm not aware of the possibility that things could actually be bullish and, and we just got to do some pullback there and figure it out. The problem is most of the people that you guys are following online don't do that. They're like, oh, it's definitely bullish. But, it was definitely bullish up here. They were going to, again, I keep telling you guys this, man. Right about in this area right here. Right about, let me see here. Yeah, it was right around the 10th or so of December, I believe. So about a week before the high. Right about that time. That last week of the high. I remember I came across, I don't remember who it was. There was some video of somebody saying that Bitcoin was going to be 80,000 in February. And man, I texted Scott and I said, man, it is. I said, that's it, man. I said, we're at right there at the top right now. I said, it's not going to go too much higher from where we're at, most likely, because of that. Because that kind of ridiculous sentiment, and of course, it came down. But, over here, everybody's well bullish. And again, we haven't even gotten above last year's swing high here, much less the all-time high. Yet everybody's guaranteeing you this is a bullish run. That's the problem. I'm trying to, and I sit here and I talk about this. And I get a lot of flack from people who are emotionally tied to their asset. They're very emotionally bullish. And they can't see what I'm saying here. I'm like, oh, you're just bearish. Oh, why are you so stupid? Oh, look at on-chain thing. You need to learn about on-chain. I'm like, seriously? Guys, all the on-chain tells you is what has happened up to that point. It doesn't tell you what will happen in the future. Now, you can look back and say, okay, well, previously when it's done this, more times than not, it's gone up or something, right? Okay, you can say that, sure. But if we are in a different part of a cycle than what we were previously, then things aren't going to come out the same. And it's possible that a lot of people who are relying on on-chain metrics to guarantee them their bull run may just find themselves, hurting after that. No guarantees, of course, guys. But, again, the idea here is to be open-minded about what's going on, to be realistic rather than emotional. Let everybody else be emotional. Emotions lose you money. Let everybody else do that. You be logical. You can still think it's going to be bullish and go up, but you have to understand what the possibilities are that it might go down. What could happen? Where could that happen? Why would that happen? The better you can get at that type of thing, the more likely you are to buy here or here and to sell up here and here rather than the other way around where everybody usually buys here and sells here and here. They buy here, they sell here and here. Right? You don't want to be that person. You want to be that person emotionally buying and selling. But you can't not be that person if you don't understand, the realities of what's potentially going on and why price may or may not do a thing. So yeah, just some thought, again, guys, I'm not here to convince you I'm right or wrong or otherwise. I'm going to make my money either way. But the goal here is to get you informed, to get you to look at things maybe you're not paying attention to, especially if you're a new trader. Because if you're new, you're going to go through the same thing all of us went through as new traders. And it's hard to get out of that at first. So, yeah. By the way, guys, pick up the newest issue of Scott's newsletter. It went out yesterday. I wrote an article in there about the biases that are keeping you poor. So confirmation bias, stuff like that. We kind of talk about it real quick and just give you, a quick overview of it. But if you read that and you don't go, oh man, okay, yeah, then you're not paying attention. Those things will really kill you. And a lot of times new traders don't even recognize that they're happening. Or they lie to themselves, say, oh, I'm not doing that. When clearly they are. So yeah, this is what it is there. Let me see here. Pablo, what's going on, man? He says, you're one of the few in crypto Twitter calling for this. Almost everybody else is looking for clout and posting bullish tweets. Don't fall for it. Use your own judgment and try to look objectively to the charts. Don't buy dips in a downtrend. Yeah, I mean, you know, that's what it's all about, guys. It's just about providing information here and a way of looking at the charts, you know, that I've developed over the years, but which especially right now, oh my gosh, I'm sorry about that. But especially right now is so relevant because of what's going on with the dollar. You know, the dollar's kind of making its move. So if we go look at that, pull it over here. I mean, look at that. Again, if you're using Elliott Wave, we've broken above the wave 4 swing, you know, the wave 4 termination point there, and even the highest point of wave 4 there. So that confirms via Elliott Wave that the bottom is likely in there, if this count is correct. But as I've been telling you guys, you know, what I'm interested in, first of all, is getting out of this descending channel. If we get out of descending channel, there should be no reason to think that we're heading down. Get above this blue zone here. I'm really feeling really bullish about it. Up there around 95.45. So, I mean, you know, that's how we do it there. Right now, basically we've got a 1-2 and a 1-2 here, and we're working up probably a 1-2, 1-2, 1-2. Working up. Minimum wave 3 target up here of 95.12. There's another 1-2. And, you know, when we're looking at channels here, we usually expect a wave 3 breakthrough, a wave 4 retest of the resistance and support, and then push up. And so we get that basically twice here. We'll get a 3 and a 4 and a retest here, and that 5 becomes that 3, and then we'll have a 4 on the pullback here, which gets near this area again, retesting that larger wave, and then heading up. So, you know, DXY doing its thing, and you know, if it's going up like it's going, then we continue to see what we're seeing, which we're seeing the Nasdaq drop, we're seeing the S&P drop, we're seeing the Dow Jones drop, we're seeing gold and silver taking hits, we're seeing man, the Aussie just really getting hammered overnight by the dollar. I had to readjust my account this morning because it just dropped so significantly overnight. You know, USD Canadian is still rising, running well. It's been a fantastic trade so far long. Euro USD, of course, taking a hit. You know, so it is what it is, guys, when you look at it. And, of course, Bitcoin itself also taking a bit of a hit here this morning. So as long as, you know, DXY is doing its thing here, it's hard to be very bullish about anything in the short term, in the now. Now, it doesn't mean, you know, things can't finish there. You know, in this case, Bitcoin's been correcting for, you know, a couple years now, right? Potentially. So it would be, you know, whereas the stock market and everything are just now starting to, right? So, and gold and all that. So that's why I say, when I say Bitcoin, you know, Bitcoin, even if everything drops, including Bitcoin at first, Bitcoin, I think, should be the first one to recover from all that. It should recover from it a lot earlier, because it's already been going through its correction here for years. If it continues to go down lower from here, it's just finishing it up. Everybody else is just starting their corrections. Stocks, gold, silver, all that kind of stuff. They're just starting their most recent corrections. So, I mean, you know, I say that gold, I say starting it. Gold starting the correction off its high. You know, if what I'm looking for gold's hogging out, then, you know, we've got an expanded flat. So it's finishing its last 1-2 there. But, you know, again, I think Bitcoin would probably be done first. So, you know, again, guys, nothing I say about Bitcoin is meant to be bearish. It's just meant to be, you know, realistic about what's going on at the moment and about what these other things mean, especially the dollar strength. Let me see here. Let me see. Hey there, Silvio. Good to see you. Good to see you. Let me see. Positive Vector, what's going on, man? He says, people push an idea aggressively because people are emotional, especially with us all in argument. Yeah, that's the way it is. And it's understandable, guys. You know, as human beings, we're social creatures. We tend to be emotional. You know, that's what makes us human, I think, you know. But it's not something that's easily contained. It is not something that you think, that you should think that's never going to bother you as a trader. Now, I've been doing this for 25 plus years now. My emotions are there still sometimes. It's just dealing with them. It's recognizing that they're there and then dealing with them appropriately. They don't just disappear. We're not all just stoics out here, you know, without ever getting emotional about anything we're doing. But you know, it does take practice, and it takes consistently doing it. Because the minute you slack off, it all floats back, and you just go right back to what you were doing before. You have to be. It's one of those things you have to constantly pay attention to. Let me see here. Pedro, what's going on? He says, I do prefer your 5 count since 2011. It makes more sense to me. I'm thinking about different possibilities. Thanks. Yeah. No worries, man. You know, that to me, it makes the most sense here, guys. If you get everything else out of your head, let me go over here. If we get everything else out of the head and we go over here and we look at the bigger picture, I mean, realistically, it's a 1, 2, 3, 4, 5, right? And so if this is 5, these pullbacks previously that everybody's trying to compare this to, these are shorter term. These are only correcting the small movement prior to them. You know, this just correcting this. This is just correcting this. And then you get this big, you know, if this is 1 and this is 2, well, now you get this large, you have to get a larger wave 2 here because it has to correct off all of this, what's left over from all of this here. And so, you know, and the other way to look at it here, I mean, nah, you know, we'll just leave it at that. I mean, really, that's the thing. You know, that's kind of the thinking behind it. Why would we still be potentially correcting here? Well, because, you know, again, this is a much larger correction than these two were, because these were correcting these interior waves. And this is the larger wave. This is a 1, this is a 2. This is an interior 1, 2, 3, 4, 5. Again, if this is going to be a triangle here, that means this has to be a 4. So now you have to come up with a count here that makes this a 4. How do you do that? Honestly, don't know right off. You have to get in here and somehow count this properly to where this is 3 up here. And then this is a 4. So yeah, it could be. But again, if it is, you're not getting up here to 100,000 or anything off that. You know, you're getting a much smaller push there. And everybody wants it to go to, you know, 100 plus. So, you know, my thinking is if it ended up being a triangle here, and they got 28 or even 36, and then it came back for a large, you know, correction, they'd be complaining that it didn't go up further. But, you know, it's the reality of where you're at that time, you know. So, yeah. But, you know, really, it kind of just comes down to what's going on with the DXY right now. You know, deflation won't be forever, guys. Again, I've said it before. I think we've got, you know, deflation, and then, you know, we could go into inflation, but I really think we might have stagflation for a while. And then kind of move into inflation, just based on everything, the way it's going on and everything that's happening. You know, I think we get the deflation and then the stagflation, and then we get inflation coming out of that. So, you know, that's what we're looking at here. And, you know, things are really overall just doing what I was talking about them doing for so long here. So until they do something different, there's no reason for me to change the way that I'm viewing it at this time. Because it's doing what it was expected. Let me see here. What is that? FRM there says one of the best content I've ever seen. Well, I appreciate you. Thank you so much. Appreciate you. Ronan checking in as well. Crypto girl here. Let me see here. Let me see. Oh, and Zet said, bless you. Thank you for that earlier. Let me see here. Let me see here. Jake says it could be an X-wave triangle. Let me see here. I think we've looked at that before. Let me pull it back up here again. Let's see here. This right here being X-wave triangle. So I guess you would be thinking then that I mean, if that's going to be an X-wave triangle, then this would have to be a W up here, right? And then you're looking at A, B, C, D, E as an X here. And then you got a Y completing, pushing it up more. Unorthodox way of looking at it, but, I guess that could be. But you've still got to make this an ABC here for it to be a W. If this whole thing was to be an X here. So you would still find that same issue here of making this 1, 2, 3, 4, 5 waves into a 3 wave. Okay, maybe you could. I don't know. I was just looking at this here real quick. I said maybe you can do like a 1, 2, 3, 4, 5 gives you an A, and then a B, and then a C here. But I kind of look at this as a 1, 2, 3, 4, 5 here. And then you have to look at how does it all come out. So, I mean, if you could find a way to make this work with all the interior waves working here, where this is basically, I think this is probably your best way of doing that. A 1, 2, 3, 4, 5 to get you an A, and then your B here, and then your C. And that would give you a W, and then you've got your X as a triangle here, and then you got your Y. I think it would be the best way that you could get that. I'm definitely not sold on that, though. And, of course, again, with price at 10,500 and only going down to maybe 6,600 to complete that triangle, I think the DXY would have to continue further down, I think, for that to happen. I don't see... If the DXY continues pushing up strongly, and by the way, it's going to push up stronger and stronger the further it goes here, because it was so bearish, and we're having a huge exodus from the sell side. Since the reversal up, we've started seeing a huge exodus on the sell side, the short side of the DXY. They're going to start jumping in on the long side of that, which will mean it'll accelerate further. I don't know. I can't say it won't, so I don't know if it won't, but I don't know that I see it maybe just getting to 6,600 in that environment and then taking off and then, making new all-time highs and running off as an X there. I definitely can't say it won't do it, though. Yeah, I think if you do, but you've got to zoom in here and really look at these interior accounts like on the daily and make sure you've got 5 up through here. That this is 5 and all this works out well here as well. And we know this, we can get 5 out of that. We know that. So I think it really just becomes an issue, really mostly, I think, right in this area right here. But you can't just like label it on this chart here and say, oh yeah, that's all it is and go to it. There's too much information on the shorter time frames. This is the monthly chart here. If we jump it out to the weekly, that's how it looks there. The other thing that we look at here, I don't know. It's possible. Yeah, you just have to make it work really in this area here. Zoom into the daily and make that count work there. I think if you want to have a chance at that. Crystal, thank you. Let me see here. Adam says, thoughts on the daily DXY bear div that's printing. Let's see here, daily. Let's see, where are you looking at a daily bear div? Right here? Oh, yeah. But until it actually confirms, price can continue pushing up. So, we can move up, pull back, continue moving up, pull back, continue moving up. And it just continues to go up until we get above that point there and invalidate it. Or, this point over here. I mean, you're going to get a bearish divergence at some point in here, I believe. Because I don't see this just continuing way up here, here. But it should probably signal, again, the wave 2 pullback. Most likely on that. The other way you can look at this is if you're a little bit more particular, a little bit more stringent about the way you look at divs. You can look right here, and you can say, okay, we have this lower high off here. You have a higher high right here. So there's your play right there. And now we're just doing this up. So you have to be careful when you start extending further and further out and you're crossing more of these humps or dips along the way, because it kind of puts it more into question. Your most probable divs are the ones that are right with each other. When you start extending over areas, then it gets kind of questionable there. So yeah. But again, this could continue, like I said, continue pushing up there and doing its thing and getting up there, and then never actually get what you're looking for in terms of that. Let's see here. Oh, okay, Jake, you're talking about first wave down off 20 would be the W. Oh yeah. So if we jump back over here to what's going on here, yeah, that's something I've talked about. Sure, definitely a possibility. You've got a W here, and you've got an A, B, C. You'll have a D and then an E for an X. And then you have a Y down, an ABC down for Y. Yeah. That's one of the other ones that I've talked about a few times before, and is definitely something we're watching. So you've got your W comes down off here, and then you have an A, B, C, and then you'll get a D and an E, and then you'll get the Y. You imagine how painful that would be for crypto Twitter? Because not only do you not go up here, you come down, and then you go up and they get excited again, and then they come down again, and then it goes below here, and then they just like, what the heck? Because this is going to take a little bit of time to play out if we get that, I believe. It might take a few months to come down for D and then up for E. And then you still have to come down as an ABC for Y. Yeah. WXY, XZ does work as well. Sure. Another thing we looked at. WXY, XZ. Or even here, X going up a bit higher. This is that one where it maybe hits, potentially 16 or 17,000 and then comes down as a Y. A Z. So you get a W, X, Y, X, Z. Definitely another possibility. Sure. This is what I mean. This is where people, this is where I'm trying to get you guys to understand. You see, everybody's throwing up some great examples here. But especially when you're moving sideways, don't grab onto anybody that guarantees you price is going to do something, because when you're going sideways, it creates more possibilities, because you're not getting those confirmations of higher highs and lower lows. You're just kind of moving sideways. Every time you think it's going to go one way, then it reverses and goes the other, right? So yeah, lots of different potential ways to count it for sure, and then finishing it out there. But yeah, definitely the W and then the X and then I'm seeing the W and then A, B, C here. Have to think about it for X, and then an ABC down for Y. Sure, that would make a lot of sense too. Let me see here. That's the one since before the 3,000 low in December 18. Not sure which one you're talking about there, Hank, or what you're talking about there. That's the one since before the 3,000 low in December. So you're talking about something over here. Not sure what you're talking about though, man. Sorry. But yeah, so again, guys, the idea here is just to be aware, because many times you guys are going to get out there and you're going to look at the 1 hour charts or the 15-minute charts, or heck, even the 4 hour charts. The problem is that keeps you hyper focused on a particular area of the chart. It doesn't allow you to zoom out here and see what may be going on, more likely than not. Again, that article that I wrote for Scott's newsletter yesterday, that's one of the things we talk about. You know, is this idea that how do you overcome one of these biases is that you actually zoom out. You know, pay attention to what's going on the shorter and larger time frames around the time frame you're on, so you get a better idea of what may be the trend that you're in. Something may look like, you know, may look like one thing on the 4 hour charts, but look completely different on the weekly chart. So yeah. So, but yeah, lots of possibilities, guys. And none of this guarantees that price has to go down below 3,000. None of this guarantees that price will go up above 20,000. That's the thing. So, you know, if you're new, if you haven't heard me talk about it before, you know, again, just because I have an opinion about where I think price is going to go ultimately based on all these macroeconomic factors and everything else that's going on, that doesn't in any way mean you just short and you just blindly short and that's all there is to it. We're going sideways, guys. Anything can still happen here. There's still possibilities for bullish action out of there. We need confirmation one way or the other to really start feeling more sure about it. Until you get that, you'd be a fool for just thinking one thing versus the other. Now, you can get onto your shorter time frames and maybe find a bullish trend or a bearish trend on the shorter time frame and play that as that. But understand where that trend lies in the larger trend. Otherwise, you'll end up buying the top of it and then think, oh, it's going up forever. And then next thing you know, larger trend, that's the end of the larger trend. It reverses on you. You don't want to do that. You read my article twice, Crypto Girl? It wasn't very long. It was a short one. But just to get people to hopefully, you know, acknowledge to themselves. One of the, you know, guys, I'm going to start writing, I think, more and more about the psychology of trading and putting it out there. Because there's a lot of things that even inherently you guys know, but you ignore when it gets to the market there because of the emotion and everything. And you know, the important thing is to recognize those things, because if you can't recognize them, then you can't do anything to rein them in. And if you can't do that, then how do you protect yourself if you're wrong? You don't. You just generally keep on buying the dips even as price drops lower, or you know, selling, you know, shorting the tops as price continues to rise up in a trend. Which those things are fine if you're doing them on those shorter time frames. Or, you know, dollar cost averaging, buying lower if done, you know, especially if done more intelligently, you know, finding significant areas of support to buy at, isn't okay if you've got a very long time frame. But guys, you know, I a lot of times, you know, I talk to a lot of people every day, and most of them come to me and say, listen, I want to be a trader. So how do I do this? And I ask them some questions, and then they start talking like an investor. Two different things, guys. That doesn't mean you can't have an investment bag and a trading bag, but it means that if you're going to be trading, you have to think like a trader. You can't be worried about, you know, getting in down here and riding that all the way up here. That's not trading. That's investing. That's a multi-year run right there. Okay? But yet, think about it, guys. It's something most of y'all do. You're concerned about buying the absolute lowest price or selling the absolute highest price, but you say that you're a trader and you're trading. But your thought process is 100% investment. And so if you have that, if you're thinking investment, but saying you're a trader, it creates conflict in your mind. And it causes you to have a lot of trouble figuring out where you should enter and exit on your trades. That contributes a lot to not having a lot of confidence in your own entries and exits. So yeah. Yeah, definitely don't get attached to what you're trying to trade, guys. If you're doing it, it's just going to lead to emotions. You know, and of course, emotional trading most often leads to losses. So yeah. Anyway, all right, guys, it's 12 o'clock. I got to get out of here. So I really appreciate y'all joining in. Don't forget, join us over there at howtotradetowin.com. We'd love to have you there. I put that 50% off there for new members earlier. If you're a current member, We're looking at getting you guys discounts coming up here. Gosh, I guess it's going to be sometime later this week now because everything had to do with the site. I'd planned to do a little bit earlier, but now that we have to fix everything with the site, it'll be a few days extra, but we'll get you guys something. So if you're a member, we'll get you a discount as well. But new traders, you can get that 50% off right now. It's Wolf's Den 50% off, as I typed out there earlier. So jump on that, join us. We'd love to have you here. Other than that, guys, man, you know what? Seriously, just be safe out there. Be safe in the trades. Be safe out there. And, you know, it's easy to be a real jerk. And sometimes we have bad days, and we just go off on people, right? Especially our loved ones, you know, our family, our kids, whatever. But I think it's really important that we do our best to understand when that happens and to acknowledge it and to make our apologies to the people that we may have hurt in doing that. But especially, you know, with the people that we love. But even with the people that you don't know, guys, you know, you're going out there, you're out and about, you know, and somebody looks like they could use a hand, or maybe they look like they're having a tough day, just a kind word. Man, I'll be honest with you, man. Sometimes that's exactly what they need. So, you know, every time, every situation, guys, you've got a choice. You can react positively or you can react negatively. This is within yourself and the choices you make on a daily basis, as well as those that you do with other people. So I'm just a firm believer, man. If you've got a choice, which you do, why would you choose to be a jerk? Say something nice. Do something nice. You might be amazed at just how far that goes. Not just for them, but for you too. All right? All right, guys. You have a great day. Thanks a lot for checking in. We will be back on Friday for the multi-market look there. We'll look at everything on Friday, 11 a.m. Central Standard Time. So join us then. And, of course, if you join us over there at howtotradetowin.com, you can get, you know, intraday updates for all these different things that we normally talk about and more. Along with everything else I mentioned there. So earlier in the broadcast here. So remember, guys, the only thing you control in the market is how much you lose. So no matter how good it looks, it's all about that risk management, right? All right, guys, y'all take care, and we'll see y'all later. All right.